everybody, this is John. Welcome to the free video. So just kind of let's just take a look and kind of see what's going on. This is looking like it'll be a typical Thanksgiving week, which is what I call a melt up, where prices just drift higher and drift higher. Note that we've updated now that we've broke to new all-time highs here. The levels above here have been updated to reflect that. So we've got some new kind of updated voodoo targets, and let's drill down a little bit here and just kind of see where the established points are on this. So in the short term, and again, remember, we're just kind of looking for a slow grind melt up higher through Thanksgiving. I think it was 2011 where everything got crushed, but that was really due more to a currency crisis. Right now, currency crises are normal, so but at this point, you can see we've come up here to the snow line, and it's, I wouldn't be surprised to kind of see us bang our head up against here, come back to the 8 EMA, and potentially kind of pop through it by the end of the week. Remember, of course, the markets are closed Thursday, and then we got like half days and different things like that. So, but light volume rally, just looking for that on the S&Ps. And then if we look at the NASDAQ, we've got just a kind of a clean target here at 43.63, and I think we can grind our way up there, especially with the way Apple is acting. I mean, that stock is just going to town, and 128.72 is in sight. Okay, so that's kind of what's going on there. Let's look at we'll step back here a little bit and kind of look at bigger picture stuff. And for the dollar index, you can see it just kind of continues to trade sideways. After a while, we'll start seeing that it kind of builds up a squeeze. In fact, let's see if we're close. Okay, so at this point, we're actually not that close. I was looking at, since we were consolidating, but you see the Bollinger Bands have turned in. They're starting to head in, and they actually need to get into those Keltner channels before it's officially in a squeeze. But this is the kind of quiet action here that will generate that. So kind of like what we're looking at in the dollar is, we've got a period of time where it's gone quiet, and after it gets too quiet, it starts building up a squeeze. So the dollar's probably like right here. Like we'd need another couple of weeks before it could potentially get a squeeze. What I like about ILMN, this is something we did in the trading room today, where you can see that the momentum here has been going lower as it essentially trades sideways in an uptrending weekly chart with a squeeze developing. And today the momentum shifted, so we kind of bought some December in the money calls. And I think there's, this is something where a target becomes that 1272 extension at 202, and this is something too where if we can get a couple more days of strength, it would be a great time to kind of leg into a vertical spread. All right, so that's one that I like there. And then in terms of ETFs, had a couple of questions on FXY, which is the yen. Kind of like, is there anything to do here? This is a tricky one because it's so it's come down so much that it's extended. So it's like shorting it here or buying puts. It's kind of like, wow, you could be due for a snapback rally at any time. And then on the other hand, catching a falling piano, i.e. buying calls, is also pointless. So for me, there's really no setup here, but I'll tell you one I really like is TLT. TLT not only has a squeeze setting up, which is great. In terms of something like that, the squeeze can be very, very beneficial in terms of kind of pushing it higher. But the other thing to remember too is that the 30-year bonds, as are the 10-year notes, are rolling over. So, essentially the December contract rolls into March. But what happens is, if you haven't noticed this phenomenon before, is that typically then fairly quickly you're going to get what's called a gap fill. And so what do I mean by that? Well, you can see here we closed and then filled a gap. Here we closed, filled the gap. Here we closed, and then essentially that's where the December contract essentially closed. The March contract, the new contract's like a 1.5 lower, give or take, and then looking for a gap fill. So, we could get a little bit more weakness first, but I like that there's a squeeze. And then, of course, the way to take advantage of that is, guess what? You don't have to trade futures. TLT will benefit from that, and I'm looking for that to go higher. And you can, buy some in the money, like the, December 117 calls or something like that, or 118 calls, and that's a good way to participate in that. Okay, and just a reminder, so I did a class last week on ETFs that focused more on the dollar. This week I'm doing a completely new and different presentation. The goal just to kind of give additional information on ETFs in general, stuff that you can use the next day, and then talk about what I'll be doing on Saturday. And what's interesting is the type of questions that have come up, and it's kind of like, okay, John, you're looking at a strong dollar, right? And what that's going to entail in a potential bubble. And it's really understanding like the psychology behind that and the specific tools that you can use to kind of catch that stuff, okay? But it's also assuming a technique of things that you can do. It's recognizing those situations, but also techniques that you can use in this environment. So especially if you're a newbie, you're retired, you're a part-time trader, and of course for full-time traders, it's just understanding why trading options on ETFs are a really good vehicle, why options on ETFs are safer than trading futures or Forex, and you can actually hold on for some of those bigger moves. And one of the questions I always get too is, well, is this going to be what I took this last year? What's different? This is a completely different class. So if you guys have done multiple classes on different topics, I'm kind of like, well, I already did part 1 of ETFs, okay? This is part 2. This is kind of taking it to the next level. And is it something that you have to be new and advanced of anything to understand? No. My idea is always to kind of get this information as simple as possible. So tomorrow in the webinar, we're just going to be talking about coming in and saying, like, this is the stuff, whether you're new or advanced or anything like that, that you need to be aware of and you need to do to be able to trade these things, okay? Where are we here? First name, email, register now, and I'll see you at the webinar tomorrow night.